Hi, and welcome back to the ghbond channel for another RMSL update. And usually I don't do these regarding price. It's usually having to do with an event. But in this case, on Friday, we had a price event that I think is worth commenting on. So I decided to do a brief video on it. So let's get into it. And as always, we have our disclaimer. This is not financial advice. Especially with a stock like RMSL, you should be aware you can lose every penny you put into it, because it's an unproven company and disaster always looms around the corner, so you never know. But for those of you who are willing to take big risks to achieve big rewards, let's talk a little bit about what happened with RMSL on Friday. Now I'm calling this the Friday flush, and so I should define the term flush. For those of you who may not be familiar with it, it's a typical trader term when you have a stock that's been advancing on a steady beat, and then all of a sudden it takes a huge surprise dump to the downside. We call that a flush. And certainly what happened on Friday qualifies as a flush in a lot of respects. Looking at the daily chart here, you can see this big red candle flushed way down beyond any range we've seen, well, since this green candle right here. But it was a massive volume event, unlike that green candle. See this volume bar, that's major volume. So what happened here? There was obviously some major selling, millions of shares changing hands in a very short period of time. Let's take a closer look at the 1-minute chart. Now here on the 1-minute chart, we can see these two red candles right here. What's kind of unusual about this, when you have a step down like that, sometimes this candle will finish back up here and then it'll trade up. Sometimes you get the step down and then you get like a damped response. It kind of seesaws back and forth and picks some new level to trade at. Or if it's bad news, sometimes it continues down. But in this case, very unusual. This candle finishes way down here, about 1.3 cents. Then we go back with almost no volume and very little going on, and we stay at 1.6 cents for the rest of the day. Next thing we have to do now is consider what could have caused this kind of behavior. What is it that caused this to shoot straight down and then basically stabilize instantly at a new price? I'd like to do a brief review of what the strategy that I follow is based on my last video. Obviously, my buys are at 1.2 cents and 1.0 cents. So this drop didn't get down to my buy levels. My sell for short term is 2.4 cents. This is last year's price action, and so we can see in the run up to the near FDA approval that 2.4 cents was a good sell level. So what worked before may work again, so that's where I'm trying to do my short term sells. And then a sell at 4 cents in case the FDA approval runs up pre-approval, and then A, we don't get approval, or B, I've seen enough FDA stocks to know, some people say, it could 10x on FDA. Well, yeah, it could 10x. It could also just 2x. It could also drop. So FDA sounds great, but it isn't always the amazing run that everybody's hoping for. So let's review what the company guidance was. First, we're entering this time frame of mid-February to mid-March where the Delta wave testing should be complete. So I would have expected we'd be running up in anticipation of that completion, but I'm a little bit surprised that that run-up hasn't happened. And then upon completion, they plan on immediately submitting their finalized FDA 510K. So all that excitement should be upcoming. An unsuccessful testing might drive it into the buy levels I showed you on the previous chart. But more than likely, the testing will be successful, and so that will drive us into that mid-range price level. So let's analyze what happened on Friday, why the price went down. There was obviously a lot of selling. Now, it immediately gapped back up to a higher price. Typically on a flush, it sits at the bottom for a minute and it starts to gather. Sometimes flushes run right back up, but usually there's a candle for the run-up. there was no candle at all. It just immediately started trading higher. That, I think, is a key piece of evidence in our further analysis. It's not a good candidate, in my opinion, for a liquidity drive. Now, for those of you who don't know what a liquidity drive is when the market makers do something that might sound a little unethical. They run the price down, which triggers all the stops. And so you get a flood of selling, which creates a huge amount of volume, which allows people who want to buy in. That's what a liquidity drive is. I think in the case of RMSL, between myself, Mr. Moneyhaven, people on chat boards, we've warned everybody not to have a stop on RMSL. So I would imagine most people don't have stops on RMSL, so a liquidity drive is probably not a good idea. Second, getting back to our piece of evidence about the price immediately trading higher, if you were doing a liquidity drive, you wouldn't want the price to immediately trade higher. You'd want it to sit low in the hopes that people would start to see the price had dropped and other sellers would dump their shares, again allowing you to accumulate more if that was your aim. So probably not a liquidity drive. Some people think it's an insider who already knows the testing went bad. I don't believe an insider who is smart enough to know that RMSL's testing had gone bad, had inside sources, was that tight with the company, would then have been so clueless as to dump millions of shares on the market. Why would you do that? If you know RMSL, you know it's very thinly traded. And so you would parcel your shares out a little bit at a time, wait for the price to recover, sell a little more, wait for it to recover, sell a little more. There's no way you'd make a dump if you were an insider like that. Now, we've seen insider action before, and I think most stocks there is a little bit of insider activity that goes on, but that seems unlikely, a big dump like that. The simplest explanation is raising cash. In other words, saw a ticker, oh, I own RMSL. It hasn't done anything. Let me get rid of it. Dumps it on the market. Oh, wow, that didn't come out the way I expected it to. I didn't get a very good price for my shares. Well, of course, you sold in an illiquid market with a market order. Not too bright. Or possibly it could even have been a broker saying, okay, you're in margin call. I'm just going to sell random shares out of your account to meet your margin call. Oh, well, you didn't get a good price? Not my problem. I have to sell enough of your positions to raise the margin call. That's another possibility, but it seems like it's most likely a ploy for cash. Also, we note that the price immediately went back up. So what does that tell us? Most likely, it tells us that the market makers who stood and provided the liquidity for that person to dump their shares, they know where all the stops are, so they want to run it, whoever does have a stop, they want to run it through the stops. They also know where the bulk of the buy orders are down below. They don't want to run it down that far. So they just ran it down far enough where they could collect as many shares as possible. Now, market makers are not in the business of holding RMSL, so they want to get rid of it as soon as possible. So what do? They run it back up so they can get their profit, but not as high as it was, because they want the people who like RMSL to think, wow, it's a bargain here. Look, it's holding the price. It went right back up. I'm going to buy. Well, they don't have anything against RMSL. They just have a bunch of shares they just bought, millions of them, and they need to unload them and get back to even, because market makers are not in the habit of holding a position very long. They are trying to take the spread, which is why they like RMSL, because it has a huge spread. And in this case, if they take it back to a price that's a little bit lower than what the market price is, the odds of them being able to unload their newly acquired shares in a fairly quick time is pretty good. So that's my take on it. So in summary, stay the course. Nothing's really changed, and the only reason I made this video is because the action was so dramatic and such high volume. I thought I'd give you my take on it for those traders who are a little bit nervous about the move. No guarantee I'm right. That's just what my sense and experience tells me. So until next time, this is ghbond saying, can't wait for that FDA this summer.